Ladies and gentlemen, a very warm welcome to this London Shipping Law Centre webinar, which is being brought to you in association with BIMCO and the West of England P&I Club. My name is Grant Hunter. I'm a council member of the London Shipping Law Centre, and my day job is at BIMCO, where I'm responsible for BIMCO's documentary activities. Now, before we get started, a few housekeeping matters, or at least one very important housekeeping matter. We actively encourage you to ask questions during this webinar, but to do so, you must use the chat function. Your microphones have been muted, so if you can use the chat function when you want to ask a question, just type it up and we'll take note of it. And we are happy to take questions during the presentation as well as at the end. So don't feel that there isn't an opportunity to ask questions as we go along. We actively encourage that. Now, the theme of today's webinar, are electronic bills of lading the solution? Well, if you ask me, I'd say yes, but that would make for a really short webinar, and I'm sure that's not really what you want at all. So what we've done is to invite a panel of experts who can give their different perspectives and views and comments and share their insight into this whole issue of electronic bills of lading and what place they play in modern shipping. If you asked a question, of course, about our electronic bills of lading being the solution, it kind of begs the question, well, what exactly is the problem in the first place? We'll try to do that and highlight the issues. Our first speaker is going to be Nicola Cox from the West of England P&I Club. Nicola is going to highlight the issues arising out of delivering cargo without bills of lading and issues of misdelivery and claims for misdelivery and letters of indemnity. So we'll get Nicola's view there. And Nicola manages the West Defence claims, and she's also a council member of the London Shipping Law Centre like me. And in actual fact, she's also on two BIMCO subcommittees as well. So we're keeping her pretty busy these days. And then next up, we're going to have Chris Ward, who's also from the West P&I Club, where Chris is a claims manager. Chris is the West go-to man for all things to do with electronic bills of lading. So Chris is going to provide us with a sort of club insight into the whole issue of electronic bills of lading, what the concepts are, how it relates to P&I cover, and all the things you really need to know before you start using electronic bills of lading. So a very important aspect from the P&I clubs who approve many of the systems that are available to us in the industry today. And it's very important to learn this for people, so he will explain that. Then next up, we have Eric Tavares from Vale. Let's not forget that the London Shipping Law Centre, despite its title, is very much a business forum. And so it's really, really important that we get commercial input and perspective on all the things that we do here and all the things we discuss. So great that we've got a representative of Vale here today, one of the world's largest metals and minerals mining companies. So it's a really important big company. What Eric is going to do today is to share with us Vale's initiative to really push electronic bills of lading in their trade. And they've been quite successful so far, but they've really got to sort out their ambitious goals to get electronic bills of lading used across all of their trades, 100% usage in the very near future. So it's going to be really interesting to hear from Eric about some of the issues that they face and the whole initiative and how they're driving this forward from a commercial perspective. And then last, but certainly not least, because we need to look at the legal perspective and all these things to do with electronic bills of lading, we have Dr. Miriam Golby here from Queen Mary University of London, who is currently on secondment to the UK Law Commission. The UK Law Commission is currently working on a proposal for some reforms to the English legal system, part of which will be giving the same legal status to electronic bills of lading as paper bills. Now, I guess the law fraternity is sometimes criticised for lagging behind a little bit behind the speed of technological development. So here we'll get an important perspective on what's being proposed now to try to sort of bridge that gap and bring the law up to speed with technological developments. So let's see where we are with electronic bills of lading. Electronic bills of lading are not a new concept at all. When I first joined BIMCO over 25 years ago, one of the first meetings I attended was a talk about electronic bills of lading. I didn't even have a computer on my desk in those days, but people were still talking about this thing. And here we are 25 years later. It's now a really, really big topic in our industry. And there's a tremendous momentum towards moving in that direction and getting people using eBills. 25 years is a long time, especially for something technological. So where are we now? Well, the position we're in now is that there are 7 international group of P&I clubs approved systems. So there are systems where the P&I clubs are saying essentially, if you use this approved system, then you're not going to prejudice your P&I cover. We will give equivalent status to an electronic bill of lading used on one of these 7 platforms as if it was a paper document. So we have 7 different companies all vying to give you electronic bills of lading systems. That's the result of 25 years work in the industry. A lot of time and effort has gone into that. But if we've been doing this for 25 years, and certainly the system started way back with companies like Bolero, who are still very much on the scene, and then latterly we've had SDocs, who's another major player here, and then there's some new kids on the block like CargoX and Wave and TradeLens, who have just been added in the past few years. So there's been a lot of activity in this market, but what's actually been achieved? The reality is that less than 1% of the world's cargoes are actually transported on electronic bills of lading. It's a number that's going up very happily, but it's still a long way to go. 25 years, less than 1%. So really, we haven't seen any great traction with electronic bills of lading in all these years. Something needs to change and something needs to move along. Let's have a quick look at some figures. The Digital Container Ship Owners Association produced some figures here for the line industry that estimate that around 45 million bills of lading and way bills are issued annually in the liner trade. You can see that the sheer scale of this thing is absolutely enormous. They estimate that if just 50% of those bills of lading and seaway bills were made into electronic versions, they could save in processing costs up to $4 billion a year. So for the line industry, there are big savings to be made here and real benefits by getting them to get moving over to electronic bills of lading. So it's really significant for the line industry, who produce the lion's share of bills of lading and way bills in the industry. It's a slightly different story when we come to the bulk trades, who issue far less bills of lading generally. So, a single bill of lading for a cargo, perhaps 1 or 2 bills of lading per shipment. It's not large numbers. It's estimated to be around 1 million bills of lading per year. The big difference here between the liner trades, of course, is that quite often the cargoes are traded while they're en route. This adds an extra layer of complexity, can also delay the whole processing of the bill of lading because they're being traded as we go along. So that's when we come up against these obstacles in the bulk trade sector: delivery without original bills of lading, missed delivery claims, and letters of indemnity. Which brings me very neatly to Nicola, who I'm going to bring in now. Nicola, you can give your perspectives on the issue that I've just mentioned in relation to the bulk trades.
As Grant has said, I'll be talking, as it were, about the problem, the current position, the mainline position with paper bills, and I'll be talking about, in particular, delivery of cargo without production of bills of lading, where cargo has been carried under a negotiable bill or a similar document of title. And I'll be talking about club cover, both P&I and FD&D, and in particular cover for claims brought by banks, the club's claims experience, and also potential defences that may be available to banks in that scenario. I'll then be talking about, you could say, a partial solution, which is a carrier's recourse in that situation under an LOI from charterers. So club cover. Well, West of England P&I, as with all 13 international groups, we're all subject to the same pooling agreement, and therefore cargo liability in this scenario is excluded from cover. For example, in the West of England rules, it says, unless the committee otherwise determines, there is no cover in respect of any liabilities, costs and expenses arising from little 5, delivery of cargo carried under a negotiable bill of lading, etc. Having said that, you can see there is some discretion. The rule begins unless the committee otherwise determines, and that discretion will be exercised by the Shipowners Board. There is also an Omnibus Rule, which again, the board may decide to cover a liability claim in this scenario, but under an omnibus, it has to be a unanimous decision by the board. And I have to say, in my 25 years plus at West of England, I don't think I've seen a single claim that has been authorised. So basically, it is covered from, it is excluded from cover under P&I. However, the fact that claims are excluded under P&I does not mean they're excluded from defence cover. So therefore, as long as an owner or a charterer has defence cover in place from the time when the event arose, so here from the time of discharge or delivery from the vessel, and bearing in mind the defence cover can be bought from West of England separately to P&I, you don't need your P&I with West of England, there will be defence cover in place, obviously not for the liability claim itself, the value of the damages claim, but for legal costs, for example, advice as to what the carrier should do, to take local court proceedings, or then any London arbitration or high court proceedings that arise as a result in that scenario. Having said that, I suppose one warning, defence cover, FD&D cover, as with all defence insurers, is discretionary. and two of the criteria for discretion. One is legal merits, and two is the steps, member's due diligence. So the steps the member took to protect themselves against the claim. So again, defence cover, it is covered, but it will only get support really in what I call the plain vanilla type of case. So that's not where the member knew or was put on notice before or when he delivered the cargo that there was going to be a problem. It's for the normal case where it's simply supposed to be the bills haven't yet arrived, there's no problem. So that's the cover position. And I'm talking now about claims by banks against owners and cargo carriers. And here, of course, the bank will normally claim to be the lawful holder of the bill of lading under Section 2 of COGSA. And in fact, the West has seen an increasing number of these claims, probably symptomatic of a number of companies going bust, or perhaps cynically, you could say, as a result of an increasing incidence by banks lending to companies that go bust. For most of these claims, for example, a request for advice. In one scenario, our member, the original bills were supposed to be couriered to the ship. The envelope arrived, but had been torn open, was empty, and the bills had disappeared. And there, the owner, who was the club's member, sought advice as to what he should do. And in that scenario, made sure we got a police report. We had local court orders regarding the cargo and what's to be done. And also we assisted in the negotiation of a letter of indemnity from the charterer in that situation. In another case, it may be that the main thrust of the dispute has been settled. Perhaps the bank has been paid effectively by the letter of indemnity provider at the bottom of the chain. But there are bits and pieces, loose ends to tie up. For example, the original bills still have to be returned for cancellation to the owners, and we can assist again with that aspect. West has seen two published cases in these scenarios, both the Tenacity and the Archagelos Gabriel. I'm sure that's how you pronounce it in Greek. Those were mainly LOI cases, but that's the published aspect, but there were the bank's claim also arose in the background. So how these claims arise, basically in this scenario, you have the sale contract, and the buyer may or may not have its own funds for buying the cargo. If he has his own funds, he will still probably use a bank, the issuing bank, but only in that scenario he'll use his issuing bank, as it were, not quite as a post box, but to make sure via the letter of credit that the buyer's money is only transferred to the seller or the seller's confirming bank once the documents, the bill of lading, have been transferred across and are held by the issuing bank. In that example, the issuing bank will technically hold the bills of lading, but in that scenario, the issuing bank has no financial interest in the transaction, and therefore he will not be a lawful holder of the bill within the meaning of COGSA, and the issuing bank will not be able to sue for any non-delivery delivery without the bill of lading. Where the bank comes in as a claimant, or should come in as a claimant, is where the buyer has actually borrowed money or has a credit facility with the bank. And in that scenario, the money passing to the seller is actually the issuing bank's money, as it were. It's its credit facility with the buyer. And here, where the issuing bank then comes to hold the bill of lading, it will be a lawful holder of the bill of lading within the meaning of COGSA. So with that scenario, what are the defences available to owners where they're facing a claim from the bank? Probably the most important is who is the correct defendant. Owners are not always the carrier under the bill of lading. They're not always the correct defendant. It may be the ship has been bareboat chartered, in which case the bareboat charterer will be the carrier. We've had one case where it was a disponent owner who was named as the carrier on the front face of the bill of lading. In that scenario, it was that disponent owner who was the carrier. And there's quite a recent spate of case law. It's an important point for banks because there's been quite a few cases recently where banks have commenced suit against the wrong party, not against the correct carrier. And then they're desperately trying to obtain extensions of time to sue outside the 1-year Hague-Bisbee rules limitation. Secondly, is the bank the lawful holder? Does it have title to sue? It may physically hold the bills, but it may not have title to sue the lawful holder within the meaning of COGSA. And here's the example I give here. where the issuing bank has not actually given or lent any of its own money, it is not entitled to sue as lawful holder. Thirdly, did the party who took delivery of the cargo take delivery as agent for or with the consent of the bank? We've had a couple of cases. Grounds 2 and 3 are quite similar, or they can arise in similar situations. So one case, our member, the bank's customer was the seller, and the bills of lading were transferred to the bank on instructions for a collection basis only, and deliver documents against payment. And this was the archetypal position where the bank held the bill of lading, but actually had no financial interest and was not entitled to sue. In another case, there was no evidence as intended that the bank would take ownership interest or security interest in the bills. And so in that example, the bills have been endorsed by the bank to, for anonymity's sake, X. The copy of that endorsed bill of lading was held by the owner, and the owner delivered the cargo to X. Now, in that scenario, the bank held the original bills of lading, and the owner had not delivered against the original bills of lading. But was that a breach of the contract of carriage at all? Or was that actually simply following the lawful holder's instructions to deliver to X? Unfortunately, well, the endorsement was to deliver to X for custom purpose only, so that rather muddied the waters. But certainly for negotiation purposes with the bank, that can be a powerful tool or weapon to use. A more perhaps ambitious argument is number 4. The bank is bound by the charter term. So where, as often happens, the charter party includes an obligation, owners have agreed to deliver cargo not against the bill of lading, and that charter party is incorporated into the bill of lading, and it's that bill of lading the bank holds subject to. Is the bank bound by that agreement, or has it agreed to waive its right, i.e. because the owner has agreed to deliver without the bill of lading? Are they, after all, the bank cannot take an enhanced right. They're subject to the same rights as existed to the initial contracting parties. I think that's quite a respectable argument, but we've had advice in a couple of cases at West from counsel that argument won't run as a defence, mainly because in the same charter that includes the obligation on owners to deliver also includes an obligation on charterers to provide a letter of indemnity for liability, i.e. the charter recognises that the owner may well have a liability to the bank. I personally don't see why a charter party, as between owners and charterers for an LOI, will affect or influence the bank's position as claimant, but it's an argument, but perhaps more on the ambitious side. 5 and 6, so delay and quantum. Delay, again, it's an argument. I'm not sure it will completely obviate a claim, but in all the cases I've seen, both published cases in West, there's been a delay by the bank of at least 3 months, in some cases up to, I think in the NICA, 9 months before the bank raised the alarm after the cargo had disappeared. And there may be an argument in that case, you could say, against the bank, that the bank's delay meant it prevented the owner or the carrier from taking its own actions to get recourse or to find out what happened to the cargo. And vis-a-vis quantum, again, the bank it is the holder of a bill of lading, but it's only able to claim in respect of that part of the cargo that it has not been paid for by its customer. And secondly, it can only claim for its loan amount, as it were, the amount of its loan and any fee. It can't make a claim based on the cargo value or the contract sale price. So that's an argument to bear in mind for quantum. So I'm running on in time. I think I've overlaid my time. So I'll just go very quickly. So one solution, what about discharging into a warehouse? You don't deliver at all. The owner discharges into a warehouse, waits for the original bills, and then it can be delivered properly or in the normal way against the original bill. That should work, but there have been some published cases. We've also had one where that's gone wrong and the cargo has actually been stolen from the warehouse. This is the NICA. Very interesting court decision, although it was an inter partes hearing for overturning the freezing injunction, which the carrier, the owner, succeeded in. So it wasn't a final decision on the merits. But Mr. Justice Andrew Baker, in that scenario where the cargo had been stolen from the warehouse, I think it was 9 months after the cargo arrived in the warehouse, said in that scenario, the effective cause and the only effective cause of the loss is not the ship owner's discharge of the cargo otherwise than against bill of lading, but rather the breakdown in arrangement ashore by way of the claimant, that's the bank, becoming the victim of a fraud that had nothing to do with the ship owner. So he overturned the freezing injunction which had been levied against the owner, but there were also criticisms about how the freezing injunction had been obtained in the first place. More generally, Mr. Justice Andrew Baker made this observation. I'm not sure it was relevant for the decision, but it's quite interesting. He's saying there has been debate whether a ship owner delivering to the party entitled, but without production of that by that party the bill of lading, is not in breach of the contract of carriage at all, or is in breach to that party, but only for nominal damages. So again, it goes back to the point vis-a-vis the capacity in which the bank is holding an agency and agreement consent by the bank. So my last slide is where, as often, the owner has agreed to deliver without bills of lading. He's liable to the bank or negotiate a settlement. What recourse under letters of indemnity? So again, we have forms the international group has put out and is published, and they're being reviewed currently. My 5 top tips, as it were, reading case law and looking at West of England cases, are those following ones. Again, wide list of beneficiaries. LOI do tend to be construed very widely by courts, generously to the carrier. Again, we've had West of England cases where the ship owner has been able to leapfrog down the LOI chain and claim against the party at the bottom who's provided the LOI, particularly where it's a big trading house with assets. Again, wide definition of triggering events include discharge or delivery. Time limit, note the Songa Wind case, where you have an LOI, even if there's time limited under the charter, if the LOI doesn't include that time limit, you're okay. You're bound by the LOI terms, even if that's wider than the charter under which the LOI was given. And again, try to have a bank countersign the LOI. I have to say that I've never seen it, but from the Tenacity, a West of England published case, particularly unfortunate, the ship owner member was refused, or his freezing injunction was overturned on the grounds that the charter had no money and therefore providing security or payment was impossible, which is particularly galling, bearing in mind that the LOI is needed in the first place because a charter in the chain is bust. So it's particularly galling just to have that reinforced, where you're not either, the ship owner is not either entitled to basically get recourse from its LOI in practice. But anyway, the five top tips are there. So that's my short 10 minutes, a little bit more, and I will hand over now to the next speaker.
Nicola, just before you hand over to Chris, thank you very much for that, by the way. I've got a quick question for you. To put this in the context of electronic bills of lading, all the things you've said, sometimes people could perceive letters of indemnity as a sort of necessary evil in the industry, something we should do without because it potentially places an owner at risk of being outside his P&I cover if there's a misdelivery. Sometimes you could see this, well, this is just a commercial solution. This has been around, it's very widely used in the tanker industry, has been for decades. It's now very widely used in the dry cargo industry as well. What is the perspective? Where do you see electronic bills of lading as a benefit? Are they likely to resolve some of these issues or concerns, or does the system work fine and really we don't see that many claims based on letters of indemnity anyway? What's your perspective there?
Well, obviously, I don't want to tread on other speakers' toes. You'll all be talking about electronic bills of lading. Obviously, no solution has no risk at all. But I think the risks that arise with paper bills, and the example I give, I mean, it just seems like from the Victorian era almost, you have a couriered envelope that's been torn open and stolen. In this day and age, it does seem bizarre that millions of dollars being traded on a basis like that. It doesn't seem very strange to me. I think it is time to move on, but I will hand over to the more experts on the eBills to talk about that.
Thank you, Nicola. You are entitled to your opinion on eBills as well as being part of this panel. So that's what I wanted to ask her. But anyway, we're going to move over to Chris Ward now, who's going to give us a P&I perspective and a bit of background on electronic bills of lading systems. Chris, you've probably seen we've got a couple of very nice questions heading your way, because I think they've got your name on them. So we'll deal with those at the end. But if I can hand over to you now and you can do your presentation first.
The world, as we know, is one in which eBills are prevalent. A tiny percentage of cargoes are carried under electronic bills. With a paper bill, we know where we stand. We are used to the way things work. even though the transmission of the paper bill is slow and the requirement for all of the related documents to be manually checked for conformity is costly. There is legal uncertainty surrounding eBills, whereas the three core functions of a paper bill are established throughout the commercial world. Signed set of paper bills is also, by its nature, unique and possessible by only one party at a time. Perhaps the invention of paper was years ahead of its time, as these advantages are not easily replicated by technology. Are eBills less susceptible to fraud? We are told that they are, but new ways of doing things will inevitably give rise to teething problems and the vulnerability of naivety. For all these reasons, commercial parties have in the majority tended towards conservatism and a wait-and-see attitude. However, the activity of recent years suggests increasing attention has been given to electronic bills of lading. The US has had legislation in place since 2003, providing for the use of electronic bills. In 2008, the Rotterdam rules were laid down, which allowed for the use of electronic bills as an alternative to paper. BIMCO released an electronic bills of lading clause for charter parties in 2014. Then in 2017, the UN Commission on International Trade Law published a model law setting out a legislative framework for the use of eBills. It is entitled the Model Law on Electronic Transferable Records. The pandemic has, of course, accelerated by years our use of remote technological solutions. In recent years, the cryptocurrency Bitcoin has garnered a lot of attention. The world-renowned investor Warren Buffett describes it as rat poison squared and says basically don't use it. It's a mirage. But the underlying technology, known as blockchain or a distributed ledger, may have a more lasting impact on humanity. Several eBill of lading platform providers are already utilizing this technology. In February of this year, Singapore substantially adopted the UNCITRAL model law into their native legislation. And in April, the UK Law Commission released a consultation paper and draft bill concerning transferable electronic trading documents, including bills of lading. The international group of P&I clubs also has a growing list of approved eBill of lading platform providers. In the absence of piecemeal legislative developments, there remains much legal uncertainty. The use of paper bills is supported by centuries-old mercantile usage, deeply entrenched into state legal systems all over the world. Paper bills give rise to rights in rem, whereas eBills do not. Paper bills are capable of being possessed at law, whereas electronic bills are not. It is only the paper bill of lading holder's rights, therefore, that are protected from infringement by the property tort, such as conversion and trespass. As matters stand, eBills have been made to work through what are known as club systems. These are closed party networks in which the parties to the bill of lading and any endorsees all sign up to an eBill of lading platform provider and agree to a set of bylaws on how the eBill is to operate. These contractual frameworks generate rights in persona. The international group has officially approved of these 7 platform providers. The year next to each provider is the year that they received such approval. The providers using distributed ledger technology are also indicated. It isn't a large data set, but it may be seen that the rate of approvals has been accelerating and that all of the recent approvals concern providers using blockchain systems. One of these providers is used, then there is cover with clubs within the international group for cargo carriage liabilities, subject of course to the traditional exclusions, such as antedated bills or the discharge of the cargo in the absence of the bills. If a non-approved provider is used, then there will be club cover only insofar as the loss would have also arisen if a paper bill had been used. So what does approval denote? What are the relevant criteria? The approved providers must have a scheme whereby the parties agree on the validity of the eBill, even where it is signed electronically, and the contractual terms of the bill are known and are actionable. The system must allow a draft bill to be rejected or claused. In addition, all the approved platform providers are required to have a scheme providing for the transfer of title to the cargo and the rights of suit, akin to COGSA 92. This is normally premised on there being a novation of the contract of carriage. Will international conventions for the carriage of goods by sea still apply by reason of the place of issue or port of loading? Will the express incorporation of the Hague-Visby rules still have the force of law? In the case of these approved providers, yes, that should be the case, as the bylaws all stipulate that such conventions are to apply to the eBill as if the eBill had been a paper bill. The Contract Rights of Third Parties Act 1999, of course, stipulates that it has no application to contracts for the carriage of goods by sea. Does that mean it has no application to an eBill? What about the provider's bylaws? Interesting questions, but ones which do not arise in the case of these approved providers, as the international group requires that they expressly disapply the 1999 Act. Finally, the system providers are required to accept liability for system failure and insurance cover some millions of dollars in respect of such failure. Okay, advantages and disadvantages of eBills then. eBills are proffered as a solution to the need for letters of indemnity to be given for the discharge of the cargo in the absence of the paper bills, typically where delays in the documentary chain have prevented the bill arriving before the ship. That looks to be correct. The long-standing provider Bolero indicates that use of their platform over the course of 6 months results in a 90% reduction in the use of LOIs. Yes, modern ships are fast, but eBills are faster. If trading documents are remitted in electronic format, potentially they can be reviewed for conformity to some extent electronically also, which may result in a cost saving, potentially making goods cheaper. And the fraud issue. eBills offer the advantage of digital signatures being applied to closed party systems. The platforms provide audit trails, allowing users to review the progress of a transaction and oversee when and by whom changes are made. If the system is hacked, then the liability is covered by insurance. For those unfamiliar, distributed ledger technology works on the basis that there is no centralized point of trust. Rather, the ledger is on all the systems of all the users. A single system may attempt to update the ledger, for example, by endorsing a bill of lading. But this update must be approved by all the other users on the system before it becomes trusted, at which point a new block is immediately added to the chain, which is the permanent record of the ledger since its inception. This technology had been described as unhackable, although some small cryptocurrency providers have begun to experience what are known as 51% attacks, whereby the hacker provides more than half of the computer processing power for the ledger, potentially at great expense to themselves, thereby becoming able to create a fork in the blockchain and sell the same currency twice. More simplistically, hackers could target shippers and carriers' email accounts, provide modified links and email addresses, email redirection, fake websites, and fake eBills of lading. Of course, fraud happens every day, including with paper, and it isn't possible to make it safe. In the absence of express provision to the contrary, an e-bill of lading may arguably be surrendered remotely at somewhere other than the discharge port. There is also variance across providers as to what precisely constitutes a valid surrender. Potential problems may be avoided if the e-bill is surrendered physically in person, in situ, at the discharge port, in as analogous a situation as possible to physically handing over a unique piece of paper. However, in circumstances where there is a disconnect in time and place between the surrender of the bill and the delivery of the cargo, risk exposure must then be controlled. For example, by the eBill platform provider giving the receiver a security code, which the carrier can then scan, or through precautionary vigilance, such as verifying ID. In conclusion, it's been a long time, but e-bills do seem to be gaining momentum. There is an increased legislative focus and a greater investment of commercial funding. Platform providers are using cutting-edge technology, and the international group is ensuring e-bill carriage under controlled circumstances. Honoured delegates, thank you for your attention. Now I'm going to turn to my couple of questions.
Thank you very much indeed, Chris. And indeed, we have a growing number of questions for you since you started speaking. So some of them I think you have answered already in your presentation already. There was a question from Tunde saying, what about jurisdictions which don't have the IT infrastructure? Is there not a risk at the end of the line? But you know, you can correct me if I'm wrong here, but essentially I think that what you said was that the existing IG approved platforms operate in a sort of a club system. It's a sort of multi-party agreement. Everyone wants to use it, has to sign up to that agreement. If they're not in the agreement, they can't play with the electronic bills of lading. They'd have to break out back to a paper bill of lading. So it's kind of like a walled garden for people using these systems. So there isn't that jurisdictional concern there, I guess. Is that right?
I think that's correct. I mean, in the case of the e-bill, we choose the governing law, so that disposes with the law governing the terms of the e-bill and so forth. But with regards to technology, providing the users have the internet and they can access the websites, the e-bill providers' websites, and I imagine that would be enough. Going back to the physical surrender point, I'm sort of imagining a world which I imagine is wildly off target, where there's a kind of official e-bill surrender terminal at each of the ports in question, or something like that. You know, one never knows how this will play out. But
okay, all right, thanks, Chris. We're gonna, I'll just not spend too much time on the questions here. We've got another question here from Jonathan Lux. Welcome, Jonathan. He's asking you, Chris, did you say electronic bills of lading don't give rise to any rights in REM? And if so, what's the basis of this?
Wow, okay, because the rights in REM, they're not recognised as property. So they're not recognised as property under English law in the sense that they can't be possessed. And therefore, English law does not recognise that possession can be infringed. And as such, they don't, the property torts don't respond. So at the moment, those rights are, they are reserved for chattels which are considered to be capable of possession at law. I understand that's the subject of the Law Commission's proposals and consultation paper. So Miriam is far better placed to deal with that issue than I am.
Okay, well, we'll maybe take that when we get to Miriam as well. And actually, while we're on sort of the Law Commission's consultation paper as well, this is a final question for you, Chris, to do with the P&I clubs. It's from Titania, who says, in the Law Commission's consultation paper, it is also recognised that the uptake of electronic bills of lading within the system of P&I clubs' multi-partite contracts has been relatively low. Are you aware of any disputes which involved electronic bills of lading? Are there any pitfalls in using electronic bills of lading within P&I club framework which could potentially outweigh the benefits? Quite a big question.
That's a big question. Okay, I think potential concerns. For my part, I feel a lot of concern about the surrender process because of this ambiguity regarding surrender. In the case of a non-approved provider, I know the international group's position is that there is club cover only insofar as liability would have also arisen in the case of a paper bill. Paper bills must be surrendered physically in person in situ, and therefore there seems to be some exposure there if an eBill platform provider is used who is not approved and the surrender process gives rise to a loss, for example, a fraud. So there's an issue there. further points, that I'm not aware of any case law, and that is an issue generally, because in the event that a dispute does arise, there is no case law setting out how it ought to be dealt with. And for my part, I don't particularly want to be the subject of a test case, which is why I'm planning to encourage that eBills get surrendered in person at the discharge ports wherever possible.
Okay, thank you very much indeed for that, Chris. Right, now, Eric, over to you. Okay, now we've heard a sort of background from the P&I clubs here. Now we've got a company that is very much behind the introduction and widespread use of electronic bills of lading. You've got a great initiative in Vale to really push ahead with this, and have already had some fabulous results. So if I can hand over to you and explain exactly what Vale's been up to.
Thank you very much, Grant. If you can share my slide, please. And thank you very much for the opportunity to open this space for us and all the partnerships that we have with BIMCO. All right, if you can move to the next slide, just a brief introduction about what Vale is for those of you that may not know Vale, right? So we are one of the largest in mining metals companies in the world, okay? Mainly producing iron ore and nickel, okay? In terms of cash, a little bit of our recent results here: $40 billion in revenue, $20 billion in EBITDA, $5 to $6 billion in capex. Operating 26 countries. Our market value currently right now is actually $130 billion. We operate 2,700 kilometers of railways, 7 ports and distribution centers and terminals all over Asia, Middle East, and obviously Brazil, right? And we are obviously listed in New York Stock Exchange and in Brazil with the highest governance level. All right, next one, please. All right, just a bit of a history here. We have been working with the initiatives of electronic bills of lading since the beginning of like 2010, right? Always talking with potential platforms and bringing this idea to our customers. We are very customer centric, so our main focus here is to obviously provide a better service to our customers. Back then, obviously, you didn't have many players, as Chris just presented. The P&I approvals were only for 2 platforms. Now we have more platforms nowadays. And the reason why we believe eDocs is the future, and also answering the main questions that we have, I mean, we do believe it's the future of our industry. So it's a paperless trade enabler, right? It's a safer and secure way to exchange the shipping documents versus paper, right? Just like Nicola said, that envelopes can be teared, and people can just take the document, and documents can go astray, right? And it's a very transparent and traceable environment when you're using these kind of platforms, right? So a little bit of our challenges here, and you can see some kind of a graph there in the bottom left corner, which is the letter of credit process. Nicola did also kind of a presentation like that, but it all starts obviously with the negotiation between Vale and the buyer, right? The buyer will, step number 1, apply for an LC application, and the bank that's going to finance them with the issuing bank. The LC will be then advised to Vale's bank, and then advised to Vale. Once we ship the cargo, right, we will get the documents done, sent to the advising bank. Obviously, CFR will charter a vessel for sure. Then send all those documents, the invoices and the certificates, depending on the customers we're selling and which countries they're buying from. We'll also obviously add the EBLs or the paper bill, right? Send it together with these documents to the advising bank. Advising bank sends to the issuing bank. Then eventually, when the payment is settled, the issuing bank will release the documents to the buyer, which will then surrender to the owner, right? And having the owner to release the cargo. Obviously, this is a normal process which doesn't involve an LOI, right? A discharge against LOI, right? So this is just, let's say, or plain vanilla nice scenario, right? So what are the main challenges as we see, especially when we talk about the LC process, right? It's a minimum of 5 stakeholders in an LC transaction. So you need to make sure that you have at least 5 stakeholders. In these cases are the exporter, the importer, the carrier, and the banks that are going to be involved, right? The banks representing the importer and the exporter. So it's a minimum of 5 stakeholders. So you have to come to an agreement with 5 different huge companies, oftenly, to do a transaction electronically, right? So when we look back, obviously, all the way from 2013 all the way to 2018, that was a hassle. It was very complicated for us because sometimes we had carriers willing to accept, but then buyers were not. Then we had buyers, but the vessel we allocated to the buyer, they were not, the carriers didn't want to accept. And then once you have the carrier and you had the buyer, then the bank doesn't want to accept. So it was a nightmare in the beginning, right? Until we had that, let's say, scalability, so that you can bring everyone on board. So that was it is still a challenge today, but much lesser than previously, because I think COVID-19 propelled us way higher now, right? And again, all the parties and stakeholders, they need to sign a platform agreement. So they need to go to a private contract, right? As explained before, this is not, Ebill is not, let's say, in theory, a title document, right? And you have to go into a platform that you have there to, let's say, legislate and make sure that operationally you are covered, right? Another challenge that we see when we're promoting the e-docs, it's obviously challenging the status quo. So you hear a lot from customers, banks, and all these stakeholders that, I mean, we have been doing this forever, right? Why do we need to change this? So we have been in Valley advocating a lot on the advantages for all the stakeholders that the EBLs can bring to these to let's say to the work that we have to execute, right? So changing the status quo, still today we see some let's say some challenges in there, right? In the beginning was probably more, but nowadays, the next slide, I'll show a little bit about our performance. And then there's also from the buyer's point of view, because I mean, if you don't have a buyer, you don't have anything, right? So there's a stigma for the working capital. So if everything is done faster, buyers tends to pay faster, right? So it's a learning curve for the buyers, that the advantage that the EBLs bring, they outweigh the fact that sometimes in some cases they may pay faster, right? So this is something that we see a shift, especially in the last year, where more and more customers are coming to us to ask for electronic documentations. Grant, if you can move to the next slide, please. So a little bit of our performance here in the past 3 years, right? So 2019, you see these are transactions, end-to-end transactions, right? They may involve banks or not. They may have customers that are open account that we don't have the banks inside, but and these transactions, they are accounted either for electronic bills of lading, electronic COA bills, or electronic delivery orders that we also work in our process here for free carriers sales. So as you can see, 2019 we had 112 transactions, end-to-end transactions with our customers. Then 2020 more than doubled, right? And I would say mainly it's a big work that we are doing internally with our account managers. To obviously, you need to make sure that you bring your sales personnel to understand the problem that you have and the things you're trying to solve, and to provide a better experience to the customer. So it's not only something that you're trying to sell a product, but you're also trying to sell a service, right? So this the e-documentation needs to be brought to the conversation with the customer. Otherwise, as you know, it's not going to happen, right? But not only like, let's say, hey, there's this functionality, but we are actually now really advocating. So we started advocating a lot in 2019, and 2020 we saw the results. And after that, unfortunately, unforeseen circumstances, as we all know, the coronavirus struck, and more and more customers are asking us to do it. In 2021, we are projecting for more than 400 transactions, right? And you can see there to your right, 2019, we had 12 customers doing eDocs transactions with us, 2020, 33, and currently right now we have around 40 customers, right, for bulk cargoes, right? And again, for coronavirus, I mean, I would like to emphasize this because as you can see, with lockdowns, right, paper documentations were not able to reach out their destination. Suddenly you lock down a province in China, the documents will not reach the issuing bank. If they don't reach the issuing bank, they don't reach the customer, they cannot take the cargo. So the customers are realizing that if you're not doing eDocs, you may disrupt your supply chain, right? So it's really important that they are looking at new ways to work. I think coronavirus is pushing everyone to see different things and different ways of working, right? And another curiosity that we're starting to see now is that customers that would do, you know, maybe to please us, they are now asking to migrate 100%. So we may do trials, but then eventually that customer would or would not become 100% eDocs, let's say, adopter, right? But now we are seeing more customers asking to do 100% e-documentation, right? And I just emphasized there legislation and equalizing the eBL to paper BL. We believe that it's key to achieve this 100% adoption. I think to provide these legal backgrounds, and if you equalize the paper BL to the eBL, right, the eBL to the paper BL, we do see that it's going to bring more adoption, right? And I think that's basically it, if I'm not mistaken. Grant, short and sweet.
Yeah, thank you very much indeed, Eric. And I think it's really, really important that we hear from big companies like Vale that are really kind of pushing the agenda on electronic bills of lading, because it's clearly you've been working on this for quite a number of years. I think you said back to 2010 or whatever. I know I'm seeing a lot of questions on our Q&A things about the whole issue of safety and security and the technology being used or whatever. So it clearly is a concern for people. But I guess, I mean, part of your process, you've obviously satisfied yourself with the level of the security available in the systems and you're comfortable with it. And also, I guess, the technology as well. I see quite a few questions there, people asking, of course, about blockchain and other similar technologies, whether all the developers and platforms are going that direction, which I believe certainly some of them are, if not all of them. I believe people like sort of Wave and CargoX are actually blockchain offerings. So that technology is being used because I think of the benefits it brings in sort of uniqueness in terms of these tokens for bills of lading. But can I ask you, I mean, as part of your process here, do you use just one particular platform that you offer to all your customers, or do you use a variety of different platforms? What way do you go with this?
Yeah, we're not stuck into only one. We are working with two platforms, and we let's say we don't leave the flag off one specific platform. We always try to give the chance for our customers to opt and select which platform they feel more comfortable with. So basically, we leave this in the hand of our customer to decide which path they want to go. So whichever path they feel more comfortable with, they then will follow.
Okay, and then there is this issue at the moment, though we've got these 7 different platforms, there is no interoperability between any of these platforms. So it means you can't start a bill of lading in one platform and switch it to another, wherever. They're all operating with these sort of closed club systems, and there's no means of communicating between them. I know BIMCO just announced recently that we're going to start work on a electronic bill of lading standard for the bulk sector, because we believe that, you know, this is part of the process of getting people beyond this rather low uptake at the moment. If we can develop a standard format for the data that goes into a bill of lading, and I think as well, maybe looking at sort of, you know, the rule books that they all use, maybe the systems can be improved in some way to sort of further the uptake even more than it is already. But, you know, you're saying you're getting quite sort of high percentages. Do you get pushback from the banks, for instance, with a bit of reluctance towards this? Is that where resistance generally comes from?
I mean, it depends from customer to customers. We see that banks nowadays, they are much more involved with this. Back in the days, we heard a lot from, you know, had players in the bank, had people, saying that why would I waste so much time and effort and money to train my team to maybe do 1 or 2 transactions a year, right? We heard this a lot from banks, but I think that this is changing. We see major banks adopting these platforms, and obviously we need our customers to push their banks. So it's a conjunct effort between all of us, and sometimes even Vale, that has relationships with banks that are financing our customers. We always go to them and say, hey, we're doing this. It's going to be good for everyone. There's a lot of value in there, more safety, more security. Everyone's going to benefit from that. And we are able to push that way. But I think when you touch the right point there, which is the interoperability between the systems, right? And I think this is key to achieve scale. I think once you have a standard, and once the companies, the service providers follow that standards, and it's widely accepted by the P&I clubs, then obviously I think it's going to be way easier to do the 100%, mass that we want to achieve, because obviously you imagine running a 50-page rule book to a state-owned company in China. I mean, it may take a while, right, for them to onboard, and until you do transaction, even though it may take a while, we still are able to do it, right? But obviously not in the pace as we want. I think in terms of when you mentioned a little bit about the technology, I think blockchain can help. I don't think that it's I would say just because of the tokenization of the document, right? So that you are certain that they are not divisible, right? So just like a NFT, so you would transfer this through the wallets. So the platforms, it would be easier, because I don't think that currently the web, powered by web, these platforms, they obviously they don't have this nowadays interoperability. I don't think the blockchain, the underlying technology is not the enabler, but I think blockchain, because we are doing, right? We have been doing this without blockchain. That's the fact. But I think that the blockchain technology and the NFT thing, and you make sure that you have the one and only title document, and you can transfer between several different platforms, no matter, because, for example, I may be using platform A, but let's say my customer wants to use a Chinese-based platform that's has nothing to do with, I don't know, another company, a platform maybe in Europe, for example, right? So once I think we achieve this, let's say, kind of a freedom and ability to transact the let's say, title document in that, let's say, ledger, then I think 100% will be a done deal.
Okay, thank you very much indeed for that, Eric, and thank you for answering the question that several people posed regarding working in the Chinese market as well, which obviously would obviously talk with people's agenda as well. So thank you for answering that one. Okay, thank you for that. Now we're going to move across to the legal perspective on electronic bills of lading. And as I mentioned right at the very beginning, the Law Commission has just put out a consultation paper and a draft bill concerning certain reforms to the English legal system, which would have an impact on the use and recognition of electronic bills of lading. So very pleased now to hand over to Miriam to give us the lowdown on that development. Thank you, Miriam.
Thanks for having me participate in this panel. It's a great honor and pleasure. As Grant said, I'm a professor at Queen Mary University of London, and for the past few months I have been on secondment, on part-time secondment to the Law Commission of England and Wales to work on their electronic trade documents project. This project, the whole purpose of this project is to ensure that trade documents such as bills of lading and other documents used in international trade, including ships delivery orders and, for example, warehouse receipts, can be used legally in electronic form and achieve the same legal effects as their paper counterparts. Now, why is legislative intervention necessary? The reason it is necessary is because of the nature of a document of title. And I've put on my first slide a descriptive definition of what a document of title or a negotiable instrument is. Both of these types of document work in substantially the same way. Essentially, they record a promise a contractual promise, it's usually to deliver goods or to pay a certain amount of money. In the case of insurance, it is to pay out upon a loss occurring, a covered loss occurring. The piece of paper is issued to the promisee, and the promisee can transfer its rights to claim performance of the obligation recorded in the piece of paper by transferring the piece of paper itself. So we say that the piece of paper embodies the right to claim the performance of this obligation. How do you claim performance? Well, you present the paper document to the issuer or promisor. As you can see from that brief descriptive definition, possession of the document is key. And this is why digitalizing these documents is much less straightforward, legally speaking, and also probably practically speaking, than digitalizing any run-of-the-mill record of a transaction or of a contractual promise. And you can see the importance of possession also in the law relating to bills of lading. So the Carriage of Goods by Sea Act 1992, Section 5, you can see there the definition of a holder of a bill of lading. Essentially, in order to be the holder, you need to have possession of the bill. There may also be other requirements, as I think it was either Chris or Nicola who said earlier, that you can be in possession of the bill without being the holder. You need to come into possession of the bill pursuant to a valid transfer of the bill. But possession is key. Without possession, you cannot be the holder, and you cannot exercise the rights of the holder, the rights granted by law. And contractual terms might also require that what you present to your buyer is a document that gives the buyer rights against the carrier, rights to trade the goods. And I've underlined the relevant parts of Article A6 from CIF Incoterms. So any document that is presented by the seller under a CIF contract must enable the buyer to claim the goods from the carrier. It also must enable the buyer to sell the goods while they are in transit. So again, really important also to perform your contract of sale correctly, that you tender something which complies with these terms. Now, what is the legal problem? Well, the legal problem derives from the case law on intangibles. Intangibles under English law cannot, in the current state of English law, be possessed. So you cannot be in possession of an intangible. And of course, electronic documents, being electronic, not having physical form, are intangibles. So essentially, there have been a number of cases before the English courts where the courts were asked to recognize that intangibles could be possessed, so that the people having these intangibles could rely on remedies, common law remedies, equitable remedies that are tied to possession. However, the courts have said that this is a step too far for us. This is something Parliament needs to do. And the Law Commission proposals are there essentially to propose ways in which this can be done. So what I'm going to do is the consultation paper published by the Law Commission on 30th April is 200 pages long. Not to worry if you don't have time to read all of that. There is also a 20-page summary. And there are a number of consultation questions, because it's important to note this is still work in progress. So it's a genuine consultation. We want the reactions of industry. We want the reactions of lawyers. We want the reactions of people who will eventually have to apply the law, should it be adopted by Parliament. So what I'm going to focus on in the 5 to 7 minutes I have left is the draft bill, which was published as an annex to the consultation paper. And again, I want to emphasize this is not, in no way is this set in stone. So any reactions, any inputs from the audience today would be most welcome. And do feel free to respond to the consultation. It is open until the 30th of July. So the first clause in the draft bill sets out the scope of application of the proposed reforms. So the law we are proposing will apply to trade documents, and the trade documents included are the ones listed on this slide. You will see that ships delivery orders are included and warehouse receipts are included. And this is because even though at common law they are not documents of title, when they are often, as a matter of industry practice, issued to order. And when they are issued to order, possession is relevant and they are transferred by delivery, by endorsement and delivery. Then paragraph 3 of clause 1 defines an electronic trade document. And you will see that there are various features that this document needs to have, this electronic needs to have. First of all, quite obviously, it needs to be in electronic form. And the word electronic there, it was used, it's quite a broad term, and this was quite deliberate. We want technological neutrality because we know what technologies are available today. We don't know what might be available in the future. Second, it needs to contain the information that would be required to be contained in the equivalent trade document in paper form. So in essence, it needs to have the information that a bill of lading would be required to have. And you will remember that under COGSA 1971, the Hague-Visby rules, there are various pieces of information that need to be included in a bill of lading. C, and this is the crucial bit here, it needs to be held by means of a system that secures that no more than one person has control of the document at any one time, and that after the document is transferred from one person to another, the transferor no longer has control of it. So essentially, this requires that a technology is used which essentially prevents double spending, one, and secondly, is able to identify who has control of the document, who has exclusive control of the document. So to recap, paragraph A, technological neutrality. Paragraph B requires equivalence in terms of content. Paragraph 3 provides that the document must be associated exclusively with one person, and this is the person having control. You will notice that there's no explicit integrity requirement, although the English law of evidence is very, very well placed to deal with any questions of integrity that might arise. So that is not an area in which the Law Commission felt it needed to go. Then, moving on to clause 2 of the bill, there are 2 parts to it. Paragraph 1 tells you who has control. Tells you who has possession, and essentially it says that control, exclusive control, amounts to possession for the purposes of English law. So if you have control, in other words, if you have exclusive control as required by clause 1, 3C, you have possession for the purposes of the law. This means you can rely on remedies that are tied to possession, such as conversion. Secondly, for those purposes, possession of the electronic trade document is transferred from one person to another when the transferee gains control of it. So at this point, you have a transfer of possession. Just as in the physical world, you would know when there is transfer of possession because the thing is physically in the control of someone else. The draft bill also contains a definition of control in paragraph 4 of clause 1. A person has control of a document if the person is able to use the document and transfer or otherwise dispose of it. So this is what constitutes control for the purposes of the law. So just a few notes about the concept of control. Control enables one to establish to whom performance is due. What this means is that on designing the system's protocols and underlying terms of use, one needs to determine how to effect a transfer of control over the system. So essentially, it needs to be clear what act is equivalent to handing over a document with or without endorsement. There's also a provision in the draft bill on endorsement. And essentially, basically, it says you need to find a way of establishing that endorsement is intended to take place and has taken place. And this needs to be built into the system design. And finally, and this is my final slide, I'm sorry if I've overrun by a little bit. Clause 3 of the bill is another substantive clause which is designed to deal with situations, and I believe there were a number of questions on this. What happens if one of the jurisdictions involved in the goods transit, or perhaps the destination jurisdiction, does not recognize that a bill of lading can be electronic? What do you do then? Well, there's going to be obviously a transitional period where electronic bills of lading are not recognized everywhere as bills of lading. So in this situation, the only real solution, legal solution, which can be adopted domestically, is to say, in this situation, an electronic document can be replaced by a paper document, so that you still have only one document in circulation. The electronic document is taken out of circulation. It ceases to have effect, and in place of it, an identical paper document is issued in its place, so that it can be used in jurisdictions where the electronic document is not recognized as a bill.
Lovely. Thank you very much indeed, Miriam, for that. Very interesting stuff indeed. A question for you, Miriam. We've been asked this, is legislative assistance really necessary? Because what we've got out here already, we've got any number of systems with their own private rule books that are working perfectly well in a commercial environment. Eric there's using two of these platforms on a regular basis, pushing up the number of electronic bills of ladings, Bali issues or whatever. Perhaps we could see with the general momentum at the moment, more and more of these platforms being used for ever increasing numbers of bills of lading, but under these private contracts. What's being proposed here is perhaps, changes to English law. We've seen, the Singaporeans do something. I think the model law has been incorporated in Bahrain as well, but it's going to be a process that takes a long time. And the last part of your presentation there, you talked about this transitional period when you hit upon a jurisdiction that doesn't recognize a bill of lading in its electronic format and you break it down to paper again. Given the momentum in the commercial world, are you going to be able to sort of match up in the legal world with these reforms, or is it too little, too late sort of thing? Is it you trying to play catch up and really the commercial world is speeding ahead and needs to do things to get electronic bills of lading up and running in high volumes now?
Well, Grant, I wish I could change the law of the whole world. I really wish I could do it. But unfortunately, that is up to the jurisdictions involved. I think an important reason for legislating is that a paper bill of lading currently gives you rights against the whole world. It gives you rights in the goods against the whole world, because bills of lading are the products of the lex mercatoria, the transnational law merchant. And as a result of this, across the whole world, they are recognized as doing substantially the same thing. If you have this document, you've got rights in the goods, and those rights are enforceable against everybody. I think someone mentioned in the chat, in the Q&A, that basically there's a presumption of ownership if you are holding a bill of lading pursuant to a valid transfer. So this cannot be said of an electronic bill. It simply can't unless you have a law which says, yes, this is a bill of lading. It doesn't matter that it's not on paper. So I don't know whether that answers your question. I feel like I haven't answered your question.
Well, I guess it's more from the point of view that, you know, maybe Eric can come in here as well, that we've got this kind of commercial momentum that wants a solution and they want it now and they want to grow. They don't want to wait however many years for you to get a bill through the, you know, the UK Parliament, whatever, and all the other countries to do it. It's a long-term goal, but how do we deal with the short-term goals of getting electronic bills of lading more widely used? And that you're kind of like sort of following on, but really the industry needs to move ahead now.
Yeah, I mean, if I can add, obviously, if you have that, if Miriam can solve that problem tomorrow, it would be great. But meanwhile, we'll continue to push here with our customers, you know, bringing this initiative to them, advocating, right, that our industry is going to benefit as a whole by using the electronic documentations. And we will leverage these current platforms that are P&I approved, obviously, to make this happen. Right. This and maybe 2 years from now, if we don't have that, you know, UK sorted, we instead of probably 60–80%, we'll be doing 40%. Who knows? But as long as we are increasing, we're happy. Right. That's the plan.
And another point I suppose that could be made, Grant, is that a lot of these contracts of carriage are governed by English law as the party's choice of law, really quite a large proportion of them. For example, if you look at the standard terms of Maersk and MSC, they both have English law and English jurisdiction as their choice of law. And while this cannot affect the status of the bill of lading in the various jurisdictions where the goods might end up, it does mean that in terms of contractual rights, novation, which a number of these private electronic bill of lading solutions need to rely on in order to create that nexus between the carrier and the transferee, no longer remains necessary.
Okay, thank you very much for that, Miriam. And I think, as well as you've already said, I think we should be encouraging everyone listening in today to, you know, look at your consultation paper and give you some feedback, because that's what you need from the industry to see what they're interested in getting out of this as well. So we've got a few minutes left. I'm just going to throw out some questions to the panel in general. You can ask, you know, answer them if you feel comfortable with it. First one here from Charles D. Batista. It's a famous name. How do you make sure that other commercial documents that need to be tendered for payment, like a certificate of origin or quality, travel at the same speed as an eBill? And if you can't, how does the speed of the eBill actually benefit the buyer? Who would like to take that one? Eric, I'm sure.
I feel like I may have talked too much. I'll just give my 2 cents. I mean, these platforms currently nowadays they provide an ability for you to attach, let's say, other supporting documents to the EBL flooding, right? So it goes as a package. Imagine an envelope. You send an envelope to the customer or to the bank. So all these documents, they fly at the same speed as the EBL, right? So there's that. And I mean, the benefits from customers, I mean, there are many. Avoid supply chain disruption, transparency, avoid, you know, misdelivery, especially you have a long chain of sales, you may suffer from that. Reduce the exposure to LOI for some certain cases, right? So I mean, there are many arguments that you can pitch to your customer for sure.
Thank you very much indeed for that. A few other ones as well. I guess the general question is you know, for all of you on the panel, if electronic bills of lading systems have been around for 25 years, yes, they've developed, yes, we're seeing new technologies like blockchain or whatever emerging that can make the whole thing more secure or whatever, but after 25 years, you know, we haven't had the changes to the law, we've got this technology, we've got these systems, and yet still there seems to be a very slow growth. Well, what's your kind of views on that? How do we unblock this volcano of electronic bills of lading that's waiting to get out? Don't all talk at once, you know what I'm saying?
You know, I suppose practically speaking, if there was one platform rather than the 6, 7 or 8 that there are, would probably help. But as time goes on, it looks like there's going to be more platforms. And actually, it's a little bit like, I don't know, your mobile phone charger. You want to be able to use your charger for whichever phone you have rather than having to, you know, change it with it. But that's a commercial issue, I'm sure. But
it's a very good point, because like standardization, which, you know, BIMCO here, that's what we're all about. We would like to see standards used across the industry. And I guess in some ways, I mean, yes, you're saying, Nicola, we've got 7 platforms that may be growing in the future as well. If everyone's been very enthusiastic about, you know, adopting electronic bills of lading, and we've seen a recent announcement by MSC, you know, putting out a system together with Wave, that's great, but that's kind of the industry kind of fragmenting slightly because these platforms aren't speaking to each other, and it's a solution, but is it sustainable for the industry in the long term? And maybe we do need standards. Maybe that is part of it. But, sorry, I interrupted you, Miriam.
No, sorry, Grant. I just was going to say I completely agree with Nicola. I think standardization is key. I know the DCSA is working very hard to produce standards, but also they are working alongside the DSI, which is an ICC led initiative to standardize trade standards. Because essentially, if you have common standards across the liner transportation industry, that's fantastic, but it's not enough. The standards need to be compliant also, or consistent, or able to work alongside standards being used by banks, for example, to transact online. So I think there's a lot of work going on in the field of standardization. The WTO has also published various materials saying this is the way forward and this is the way to harness technologies like blockchain. And I for one am really confident that from the practical point of view, the obstacles will be ironed out, because there's so much to gain, as Eric has been saying, by making this happen.
One question I have. How expensive is it to join these platforms? Are they all similar price? Do you have to subscribe to each platform you want to use, or how many does Vale subscribe to?
Yeah, as I mentioned before, we are subscribed to 2 platforms. I mean, price-wise, I will not comment. I don't think I'm in a position to comment. I may burn myself here, so I'd rather not comment. But yeah, I mean, we're working with two platforms. But the good thing is that buyers don't have they don't need to pay, right? So it's free of charge for buyers. So that's a good motivation for buyers, right? If you're bringing some solution for them, which they don't have to pay. So it's appealing.
And as far as I know, Eric, it's also free of charge for ship owners. At least that was certainly the position in 2014 when we developed our electronic bills of lading clause, that those organizations that previously charged ship owners and realized that was a bit of a barrier to entry, I don't believe they do charge owners to subscribe to the systems.
Yeah, they are also not charged to ship owners.
Okay, that's good. You get something for nothing, can't be bad. All right, I've got an interesting question here, because it also ties back to a webinar I did a few weeks ago on decarbonisation and shipping. So it's quite good to link the 2 things together here. And it's a question from Thomas Macy there, who says, what are the environmental implications of eBill systems that utilise blockchain technology? Doesn't it gobble up electricity? Would that be good for the shipping industry? But of course, there's always these things we see on documentaries and things saying that, you know, it requires so much computing power to do blockchain that you need all these air conditioning units to keep the computers cool, and that uses tons of electricity, and therefore you need to generate more electricity and pump more carbon into the atmosphere. So what is the panel's view on that, the link between electronic bills of lading and decarbonisation?
A statistic I heard thrown around is that Bitcoin uses up as much electricity as Argentina. So plainly, the technology does need to be adapted and refined I guess, to prevent an enormous consumption of electricity. And obviously, the carbon footprint that comes with that.
Yes, I understand some of these sort of computing places are based in places like Iceland, where it's nice and cold and they get free air conditioning by just having a hole in the roof. So I guess there are ways around it, I suppose. I don't really know. But yeah, I mean, it is a consideration. I mean, technology comes with many advantages, but also some disadvantages. And, we have to be careful not to be criticized in that respect. Though given that, I mean, it's fair to say that electronic bills of lading is part of a much bigger initiative to digitalize trade globally. I mean, electronic bills are just one small part of this. So the initiatives like bodies like the International Chamber of Commerce, that's digitalizing business across the world, not just shipping business, all businesses. So it's part of a much, much bigger picture. So it isn't us just in isolation looking at the electronic bills. It's part of a broader picture of digitalizing things. So I think we're actually pretty close now to our time up there. It's 27 minutes past. I think I was given to 1/4 and an extra 15 minutes for questions if absolutely necessary. I think we've had a great selection of questions. We haven't been able to answer all of them. It's on a sort of our Q&A checklist here, so we will go through them and send people answers, written answers to these if we can, if we know the answers. But we really appreciate the input that we've had here and the engagement for the audience. So it just remains from me to say a really, really big thank you on behalf of the London Shipping Law Centre President, Mrs. Aleka Shepherd. She's very grateful for everyone's attendance here today. I'd like to say a big thank you to our panelists, Nicola, Chris, Eric and Miriam. Thank you very much indeed for your engagement and for sharing your views and knowledge here today. Thank you to Gerard at the London Shipping Law Centre, who works behind the scenes and has helped set all this up. We don't see him, but he plays an invaluable role here, so I'm very keen to thank him. And thank you most of all to our audience for joining today. I sort of noted that we're over 250 people from all around the world. It really has been very much a global webinar here today, and I think that's excellent to see the engagement of the industry on this really important topic. And hopefully the next time we have a webinar on it, we'll be able to report much higher statistics on the use of electronic bills for lading. So thank you to everyone for joining, and thank you very much and goodbye.
Thank you very much.